What's going on, everybody? It's Stas here. So the stock market was boring today, guys. Didn't do much. S&P 500 down 1 point. The Dow Jones ended up going down 66 points. And the NASDAQ 100 inched a small green day up 13 points as the Russell 2000 ended up going down about 1%, down about 16 points on the day. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over a bunch of breakout stocks that I'm actually looking to buy right now. And I also want to share with you guys what I've been doing in the markets, some earnings reports here that came out yesterday, the jobs numbers from October, and in general where my head is at right now as a trader, as an investor during these very rocky times overall in the world. So if you guys find value, hit the like button, make sure to subscribe to the channel, check out the Strive Smart Discord chat and Facebook group, link down below. You could also get 3 free stocks from WeBull valued up to $1,600 if you deposit $100 using my link, and that is also linked right down below. So let's talk, guys. Again, it wasn't that great of a day, but judging on this 5-day, 5-minute chart, you can't really complain, right? The S&P's gone from 3230 up to 3530 literally in the past 3-4 trading days, right? That's a move of about 8% from that bottom point, 3230, to about 3530. So the fact that we're consolidating today, we pretty much broke even, we're not moving much, you can't complain because the markets have literally exploded the past couple of days. And what you guys have to understand is the market doesn't go up every day. I mean, that's unhealthy. The market has to have pull downs. It has to have points where it cools off and it consolidates. And that's exactly what we're seeing right now. You guys can see we ended up gapping down this morning. If we zoom in a bit here on the 1-day, 1 minute, you'll be able to see it. We gapped down this morning. We hit 3480. We broke yesterday's critical support at about 3500 and about 3505. But ultimately, we ended up rallying for the rest of the day for the most part, and we ended up closing right around where we opened today, which is a pretty decent sign here for the bulls, right? You guys can see it now that I extended that line. So S&P closed right around 3510 where it ended up opening today. And we actually had a pretty nice rally until the last 10 minutes of the market, all the way to about 35.20. So for next week, guys, what am I looking at? Of course, I'm looking at the election. What's going down with the election? At this point, we don't have a winner. Biden is likely to win based on the states here, Nevada, Georgia slowly turning blue, and same with Pennsylvania, right? North Carolina still red, and Arizona, I believe they're still counting there. But overall, if Biden wins, we might see the continuation of this rally. And a lot of people before the election thought that Biden would crash the market. But it seems like at this point, the market is getting very comfortable with the fact that Joe Biden is likely to be the president. So I think likely here, the trend could continue. I think it's very possible that we could continue going up, right? And now the tricky thing is, what if Trump somehow got a victory? Would the market tank? I'm not sure. That's kind of, nobody knows, obviously, but that's kind of a difficult question to even think about. But at this point, and what I recommend to you guys and what I'm doing, I'm trading what's in front of me. And what I see here is the bulls are still in charge. 5-day, 5-minute, the uptrend is holding. And we have a big resistance coming up at 35.30, which is the double top high from yesterday, and at about 35.45. That actually is a point, if we zoom back here, 4-hour chart, 35, 45, 50, right around that area is the high from back in the middle of October. So that could be the next spot S&P does go to. And if that breaks, we could be going back to the all-time high, which is the high from back in the beginning of September. On the 2nd, I believe, of September is where we made that all-time high. So overall, we're consolidating. We're seeing a bit of cooling off here. And tomorrow, or not tomorrow, I wish the market was open tomorrow, guys. That would be nuts if the market was open on the weekends. But Monday, what I'm looking for is simply the direction pick. Do we break 35.30 on the upside? If so, I could see all-time highs coming. Or do we end up breaking 3,500, 3,490 on the downside? Maybe that low point from today at 3,480. If we break that, we might see maybe another little sell-off here in the markets. Maybe back down to, let's say, 3,460. And when it comes down to the SPY, the ETF that tracks the S&P 500, you guys see a lot of the same since it literally tracks the S&P 500, which we just looked at, right? We're consolidating today, ended up going down about 0.02%, which is literally break even, and we're at a big resistance at 351 to about 352 on SPY right here. That needs to break, and if we pull back a bit for our chart, I think if 351 to 352 breaks, that is where we'll be gunning likely for the mid 350s. That is the high from back in the middle of October, right around 354. That would be the point. That's the gap that we will likely fill if we're able to break 351 on Monday, Tuesday, Wednesday, maybe some point next week, right? And if 354 breaks, if I pull back a bit more again, we might be gunning for that all-time high back in the beginning of September, which on SPY here is right around 358 points. So bullish, guys. We're very bullish, and even after hours here, we're moving up higher. You guys can see it. SPY is up after hours. And when it comes down to the Dow Jones, not much to say here that's different. I mean, we're consolidating 5-day, 5-minute. You guys can see it. We're holding 28,200 very nicely, like I've said in many videos. That's a big level. It was a resistance. Now that we broke out of it yesterday, it's turned into a support. And you guys can see literally the past 2 trading days, we've held it once, twice, 3, 4, 5, 6 times. So needless to say, it's a very strong level of support. So I'm watching out here, Dow Jones 28,200. If that ends up holding, we might see another gap up. The next gap up could be around 29,000, 28,900 to 29,000. That is exactly where we got to in the middle of October, as well as back in the beginning of September. So watch for that gap to fill. If 28,200 fails to hold, though, we might be going back towards the middle 27,000 level. Mid 27,000, 27,300, 400, 500. So watch out for that. It all depends on what happens at 28,200 next week. And when it comes down to the NASDAQ 100, the tech heavy index here, let's take a look at what's happening. We closed right under a big resistance, right under 12,000 to 12,100. And like I said yesterday, guys, and it still stands because we're still above this main level of resistance, we broke out of this little wedge. I know it's a lot here. Let me just clear the drawing set so you guys can see it a bit clearer. Let me draw support at 11,500, and then we can draw the downtrend here, which was the downtrend until we broke it yesterday. You guys can see we gapped out of this. That's good. And I guess you could also draw it like this, but that doesn't make as much sense to me. But either way, we gapped out yesterday. Let me just quickly remove this. We gapped out yesterday of the resistance, and we filled the gap nicely to 12,000. So at this point, we are a bit overbought. So if we get out of 12,100, I mean, we're going to be due for a pull down eventually. So I'd rather just get it over with now. I mean, if we pull down to 11,800, then we ripped out of 12,100, that would be great. We might be going to all-time highs if that ends up happening. So it's kind of, I don't want to say risky, but it could go either way, right? It could really go either way at this point, which is why I'm not to say that I'm not in any positions, because I am, but I have some cash ready to go just in case we do experience a little bit of a pull down here. But overall, markets are bullish. Let me know your thoughts down below in the comments, guys. And we also got jobs numbers today. Non-farm payroll from October came in at 638,000 versus the 580,000 jobs that were expected by, I believe, the Dow Jones expected that, the forecast there. And we got in September about 672,000 jobs added. So ever since the crisis occurred, we've been adding a ton of jobs to the market, but the amount of jobs have been decelerating, right? I believe back in May it was like 4 million or something crazy. June was around in the millions, and then we've been declining ever since, right? And you guys can go look at the exact figures, but we got that initial snapback in May, June, and now in October, a couple months later, we added about 638,000 jobs, which, hey, that's good. I mean, but it's not what we had back in May, because in May we saw the initial snapback, right? That was when a lot of people were unemployed. So it makes sense that we got that snapback and we got the unemployment rate going down to 6.9%. And they actually surveyed, the economists surveyed by the Dow Jones, they forecasted 7.7% unemployment. So we beat there. They actually only expected 530,000 jobs, so it wasn't 580, it was 530 that they expected, and we came in at 630. So that is a very, very good sign. And the September unemployment rate was 7.9%. So September 7.9%. Now we went down to about 6.9% in October. That is very good. If you guys remember a couple months ago, the unemployment rate was like 14%. So we've halved it in the past couple of months. That is a very good sign, but still there's a ton of Americans out there struggling, unemployed, and 7%, I mean, that's still a pretty high unemployment rate considering, you know, a year ago it was at like 2% or something like that, right? So we're not in the best of shape, but the fact that we are adding jobs, I guess that's a good sign. It's a good sign of progression, right? Let's just put it that way. So let me know your thoughts on everything, guys, the market, the jobs numbers, where we're headed. And if you guys are enjoying the video so far, make sure to hit the like button. And also, don't forget to claim your 3 free stocks from WeBull. Those are valued up to $1,600. All you have to do is use my link, deposit $100. You get 3 free stocks, and I also get 3 free stocks since it is an affiliate link. So let's talk about what I personally did today. And I actually didn't do much. I was eyeing up a Zoom day trade, and I missed my entry. It was at about 495, 500. I was looking at it, and it ended up gapping out once I turned my head and I missed the move. You know, it went from about 500 to 505, and then I didn't want to get in at that point because in my head the move was already made. So I missed that move, which is okay, but I'm still in SLV, and we'll talk more about Zoom here in a couple of minutes, but I'm still in SLV, which I ended up getting in yesterday at $23.20. This is an ETF that tracks the silver price. It tracks the price of silver, right? Whenever silver's going up, SLV's going up. So we had a nice day overall in silver today, up 2%, up 52 cents an ounce, and that ended up pushing up SLV a good chunk here, up about almost 1%, and we see the nice breakout on SLV out of the moving averages here. We're breaking out of the wedge as well, so this is looking very bullish, hence why I bought some shares. And I'm also still in Apple, AAPL, which I'm in at about, I'd say now my average is like $112. I ended up getting in at 115, bought more at 109.50. And quite honestly, guys, I'm waiting to see if we break this resistance like I have outlined here on my chart. If we do, I might even add more into the bullish momentum, right? A lot of people like to say, and I like doing this as well, adding to your winners. Just because, you know, your stock that you're in is pushing up, it doesn't mean that you can't add more to it, if that makes any sense. Sure, you can trim profits, but you could also add more to it, you know, and kind of ride the trend. That's kind of what I'm looking to do here with Apple once we get that confirmation. And I'm still in EA, which got hit pretty hard today, guys, down 7%. I almost added more, but I didn't. I'm looking to see what happens here at 119, 120 next week. It seems like we are holding it quite nicely as of now. We gapped down, ended up holding it yesterday. We went down a bit further today at 114, had this reverse head and shoulder action, nicely recovered into the close to make that right shoulder. Now we just have to see what's going on above 120. I mean, if we end up gapping out, we could fill the gap up to maybe 125 in the next couple of weeks. I think that's very possible here with EA. And Workhorse, I'm also still in, which I'm not even sure how that did today. Down 2.4%. Not too bad of a day. Seems like we're struggling overall under 1770. That is a big resistance here on Workhorse. It's still trading under the main moving averages as well on the hourly chart, which is a bit worrisome. So for the bulls to gain momentum back in their favor, because they clearly don't have it at this point, Workhorse needs to break out of 1770, $19, and eventually $20. I think once we get over $20, I think Workhorse has a lot of upwards momentum. And mind you guys, next week we are having an earnings report on Workhorse on Monday, so that could easily fluctuate the stock positively or negatively, and we'll see. We'll see how that ends up going down. So let me know your thoughts. What did you guys end up doing? Let me know in the comments. Now, let's quickly talk about some other stocks here, some breakout stocks. A lot of these, most of them are high growth stocks that I'm looking at right now. So TTWO, remember we saw EA a minute ago? They didn't do well. Well, TTWO, Take-Two Interactive Software, they did do well on the flip side, right? They reported earnings of, let me see my notes here, 86 cents EPS versus, I don't actually have the estimate here, but revenue came in at $841.1 million, and that's down from $857.8 million last year. And I think that is obviously down, right? But EA was down even more compared to their last year number, and their guidance wasn't as great. And TTWO on the flip side, and a reason maybe why it went up, we got some buy ratings here. We got some price increases. We got, I believe, their guidance. Let me see if I can see it here in their live news tab. Their guidance was pretty solid. And overall, I mean, they just did better. They just did better in earnings compared to EA. And if we take a look here on the 4-hour chart, we ended up breaking out of this downwards channel, which we've been in for months, ever since the beginning of August. So this is very bullish, the fact that we broke this and both the moving averages here on the 4-hour chart. So for me, guys, it is a bit overbought. I'm not looking to rush into it quite yet, but any sign of a pull down, I would love to be a part of it on the bullish momentum. Again, this is kind of going back to Apple, what I said there, right? Apple, it's on the verge of breaking out, which if it does, I'd love to get in and ride that momentum and add more into the momentum. And going back to Take-Two here, it already did break out. Which is showing the momentum. Now we just have to pinpoint our entry and get in at the right time. And for me, I don't think now is the right time because it is a bit overbought like we just saw on the 4-hour chart. But if we get some sort of pull down, I would probably put my price target at 170. If we get 170, guys, I'll probably be, that's a tongue twister, guys. I will probably be a buyer of Take-Two at 170. I think that would be a nice entry point here. And another one is Papa John's Pizza, PZZA. They reported earnings yesterday of 35 cents versus the 33 cents estimated. Revenue came in at $472.94 million versus $468.52 million. So a double beat there, and by no means was it a stellar earnings report. But hey, the stock's up 1.5% as the market was pretty much break even. So the stock did better than the market. And we ended up breaking out of a downtrend, right? We're overall still in a downtrend, right? I mean, we're still under a big resistance at 83.50 and the 180 SMA here on the 4-hour chart. But the fact that we broke this trend line that you guys are seeing here, plus the 50 SMA, and $78, that goes to show that we're making steps to get out of the downtrend, but we're not fully out of the downtrend, if that makes any sense. So at this point, you guys probably guessed it, I need to see 84 break. I need to see 84 break. If this 180 SMA breaks as well and we do something like this, that is where I can see Papa John's take off. And quite honestly, this is a stock that arguably can do very well if we get another lockdown, if we get more restrictions, as more people are going to be staying home, ordering pizza, ordering fast food, ordering out, doing a bunch of things like that. So watch for Papa John's in that scenario, and Domino's, and of course a bunch of other e-commerce plays, tech plays, as they will likely do well as well if we get another shutdown, restrictions, and so forth. So if 84 breaks, I'm probably even going to set an alert right now. Let's just put it at 85 to give it some buffer room there. But if let's say 80, let's just put 84.50. If 84.50 breaks, this is going to be one that I'm very interested in, and even 85, 86, and I think it could go back up to the 90s, no doubt about it. So I'm watching Papa John's and Barrick Gold, guys. We haven't talked about gold miners here in a while. Again, I'm in silver ETF, but that's different from a gold miner. Gold, this is Barrick Gold, ticker symbol GOLD. They reported earnings yesterday as well. 41 cents of EPS versus 32 cents of EPS. So nice beat on EPS, and revenue came in at $3.54 billion versus $3.34 billion. So a double beat there for Barrick Gold. Broke the downtrend here, the downwards trending channel, which is very good on the 4-hour chart. Broke both the 50 and the 180 SMA. And we broke above $28 and 30 to 50 cents, that general area of old support from the beginning of August, stemming all the way to the end of September. You guys can see here how we held 28, 30, 40, 50 pretty nicely there. And the fact that we broke out of it and closed above it as a new support today, that is a very good sign. So Barrick Gold, I'm very bullish on this. And this is the company that Warren Buffett was buying a couple months ago. You guys saw his records, right? What's that form called? Oh crap, it's slipping my mind, where the funds show what they've been buying. You guys know what I'm talking about. Let me know in the comments if you guys know what form I'm talking about. I keep forgetting what it's called. But he was buying Barrick Gold, right? It broke 28.50. And honestly, guys, I've been talking about gold miners. I know I haven't in recent times, but I've been bullish gold miners ever since, February. I've been talking about this stuff. So Barrick Gold, I'm watching this one. I think there's potential as a trade from, let's say, where we are now, $28 up to at least $30, $30.50, maybe $31. And if that breaks, there could be another big leg up in this stock. And another one to watch, is GDX. This is a gold miners ETF. This one's also breaking out of this downtrend channel that you guys can see here on the 4-hour chart. It also broke the 180 and the 50 SMA on this time frame as well. So this is very bullish. So I'm watching GDX, which has a bunch of gold miners within the ETF. And I'm watching GOLD, which, by the way, this stock, Barrick Gold, is actually in the GDX ETF. So I'm watching gold miners heavily, and I'm also watching Starbucks. And by the way, guys, the gold miners are doing well right now because a lot of people are obviously interested in gold, as there's a lot of money printing. People want to get out of the dollar. The dollar's being devalued. The dollar was literally down like 1% yesterday, which is huge when it comes down to currencies. And a lot of people want to just get into gold, silver, Bitcoin, which is why we're seeing those assets do well. And gold miners are also doing well. So Starbucks, this one's looking very bullish in my eyes. We ended up breaking out of $89, $90. We held it as support. And now we're fiddling with that high at about $91, which has been a resistance now for close to a month, ever since the middle of October. We got rejected there once, twice, and now for the whole week pretty much on the 5-day, 5-minute, you can see it. We've been trading right under 91.30. It's crazy how the technicals work, guys. They work. If you guys don't believe in technical analysis, I mean, look at it for yourselves. Buyers are not, well, the second we break, I think a lot of buyers are going to come in, but the stock is not being allowed to break out of that resistance, if that makes any sense, right? We're not seeing enough buyers come in. It's being kind of trapped and held under there. So literally 91.30, and take a look where we held all week today. 91.30 once, twice, 3 times, 4 times today. We double topped there today. So I think the second we squeeze out of 91.30, a lot of buyers are going to flood in, and we might see a massive run up to the all-time highs, which are around $100. $100 here on Starbucks, right? And I've honestly been calling this stock out. I think the all-time high is $100 at least. Is it 94? Let me double check that. Yeah, it's $100, right? So we might see a run from 91 to about 94, then about $100. And again, like I said, I mean, I've been calling this stock out. I've been buying this stock since $70, $75. Not to toot my own horn, but it's going exactly how I thought, and I'm very excited and very happy about it. And I actually show this in my M1 Finance portfolio. That's where I was buying a lot of Starbucks in, and I actually did an update video to that earlier today. I'll link that down below if you guys want to see my M1 Finance portfolio. Go check it out after this video. I guarantee you guys will find value in that one. And another one here I'm bullish on is Shopify, SHOP. This one ended up filling the gap up to about 1050, like we called out a couple of videos ago, right? When it was trading at about 900, 920, 930. We talked about how if this higher low was able to hold, we're likely to fill up to the mid thousands. We did exactly that. And overall, we see an ascending triangle here on Shopify, where I think if we break 1050 and 1100 itself, 1150 even, we might see a massive squeeze here on Shopify higher. We might see a 1200 price. Who knows? We might get an explosion. That's kind of how ascending triangles end up playing out. So I'm very, very bullish on Shopify. And I mentioned a couple of videos ago, the call options, man, those premiums are unbelievable. To get one contract at least a couple days ago at 1050, I mean, you need like $6,000 to put on one contract. And I mean, honestly, I'd rather just buy the shares at that point. It's less risky, and I mean, you get to hold it, and you don't have to be right by a certain time period, if that makes any sense. Because with options, I mean, you can make a lot more money, but if you're not right by a specific date, you know, you can lose 100%, or you can lose half your money, or even 60%. I mean, you can lose a ton of money if you're not right with the timing of it. You know, the price point is one thing, you know, picking the right target, which in this case is 1050, but the timing is another thing, which is even more difficult, in my opinion, to get the timing right as opposed to the actual strike price itself. But that's a whole different topic for a whole different video. And we're going to talk about ZM now very quickly, guys, which we touched upon a little bit ago. And ZM, I think there's a lot of potential here. This is another one of those stocks that if we get a shutdown, another lockdown, restrictions, whatever, we might see this one go off again, because we see schools using it, universities, elementary schools. We see people in the professional world using this service, and it's gotten better to the point where it could handle a ton of people on it at once. It's got the, what's the word there? It's got the you guys, you tech nerds out there know what I'm talking about. It's got the bandwidth or whatever. I'm not a tech nerd like that, but it's got the capacity to hold a lot of people, which it didn't a couple years back. Even a couple, 2-3 years back, I mean, it didn't. That's just the truth. And with the capacity to hold more people on the platform, and the catalyst of maybe a restriction, more restrictions, I mean, this could bring a lot more people on the platform, and the use of it could continue to go up, which is great. So I think at this point, ZM is at a big turning point. I think 500, 505 is a big resistance, right? We're fiddling with that right now. That needs to break, in my opinion, before I get in. And I'm thinking if we end up gapping out, this could easily go back up mid 500s, high 500s. It's literally that type of stock, right? So I'm just looking for the breakout being patient, waiting for it next week. Like I said, I almost day traded it today. I missed my entry, and when I miss an entry, especially for a day trade, I don't chase it, right? There's no point of chasing it, and hindsight's 20/20, but now looking back, it's good that I didn't chase it, right? Because it didn't move much higher from where I could have chased it at, if that makes any sense. So I'm watching Zoom here on the breakout. I'm pretty bullish on this one, and Etsy, guys, Etsy is looking very similar to Zoom. We're on a downtrend in the short term, but the difference is Etsy's already broken out of the resistance and we're taking off, right? That's a very good sign. So Zoom, going back, we didn't take out of the resistances quite yet, but Etsy, we did. So Etsy has upside. Etsy can go mid-150s and even higher than that, in my opinion. And overall, the chart's just looking very bullish at this point. So Etsy, I'm watching you very closely. I'm going to set an alert on you. Let's see, maybe $148. Let's just put it there for now. We'll probably tweak it over the weekend, but that's kind of what I'm looking at here, guys. Etsy, Zoom, Shopify, Starbucks, Barrick Gold, GDX, Pizza, which is also known as Papa John's, TTWO, and of course the MJ stocks, guys. If we get Biden declared as winner here the next couple of days, watch out for these MJ stocks. Let me tell you, ACB today was up 80% at one point. That is just unbelievable. And it closed up 56%. So watch Aurora. This one could continue running. Who knows? It's possible. CGC is another one, up 10% today. We called this one out at $19. This could keep on running. And those are honestly the two main MJ stocks that I personally track. So that's it for this video, guys. Don't panic out there. Don't freak out. The market's going to do its thing. Just trade what's in front of you. That is what the goal here is. And throw your bias out the window while you're at it. Because if you think the market's going to crash and you're just waiting for it to crash, and all it does is go up and up and up, you're just going to get bitter, let's be honest. And if you're thinking the market is just going to continue going up, and then you keep just flooding in without having a hedge or some sort of cash reserve, and then all of a sudden the market goes down a bunch, you're also going to be bitter. So the moral of the story is, understand that anything could happen. Be prepared for any situation. And I'll just leave it at that, guys. So if you all enjoyed this video, hit the like button. Make sure to subscribe. Join the Discord chat and Facebook group down below. Make sure to follow me on Instagram and Twitter at Stas Surfes. And make sure to get your 3 free stocks, guys. It's literally free money. All you have to do is deposit $100. And if you don't like the platform, you can get your 3 free stocks and take out the $100. And you're not losing anything, and you're gaining money out of it. So that's linked down below. Have a great weekend, everybody. Stay safe out there. Thanks for watching. As always, keep crushing the markets. Peace out.